the dusty fields of Extremadura, a region in central Spain where the pigs are certainly a lot happier than the farmers. That's because there's now a massive glut in acorn-fed Iberian ham, or jamón de bellota.
Ham overproduction, coinciding with a fall in consumption, has affected the industry negatively because now there is a lot of ham and not much consumption. That makes the prices fall.
With more than 25 million pigs, Spain vies with Germany for the European Union's largest porcine population. Its pig industry will be buoyed by a growing German economy. Turning to the Spanish ham industry, well, it's reeling from chronic corporate and household austerity.
The farmers lose money with their pig production. So we have three facts. One, the excess in ham on offer, the fall of the average family's consumption, and then the high cost of inputs. The story of Spain's pigs is one fueled by years of excess, easy credit and lax regulations. In some ways it's reflective of another crisis among pigs, the derogatory traders acronym for Europe's faltering states, Portugal, Ireland, Greece and Spain. A crisis well known to one key Portuguese politician, speaking just after his country was bailed out to the tune of 78 billion euros.
It's true that we are facing unprecedented challenge in the European Union because for the first time we are facing this issue of sovereign debt inside a monetary union. And this is unprecedented business, and this is uncharted territory. So that requires some intellectual humility.
Acceptance of weaknesses, however, is only the first step to rebuilding confidence in a fractured Europe. It's going to take more than a facelift of the central Grand Place before Brussels can function properly again.
Europe first has to get its debt crisis under control. There seems to be two speeds to European economy. There's a core that's doing very well and it's very export driven, and there's a periphery that seems to be in constant need of financial assistance from this core. Investors want certainty, and that's what they're looking for. And Europe, I think, could use needs to bring forth a little bit more certainty.
Undoubtedly, this year's European Business Summit was trying to provide a little more of that. If conference goers could see beyond the headlines of flagging Greek debt repayments and fallout at the top of the IMF, a major EU partner, the mood was remarkably upbeat, more so than last year. There may be more optimism here among some of Europe's business leaders at this year's summit, but the Eurozone debt crisis still looms large, with many here still soul-searching and looking for answers. The only reassurance is that Europe is still the world's largest single market that businesses across the globe want to do trade with.
It's very important to remember that Europe is a very significant world player. It's the largest global economy. The single market is critically important. It's 27% of world GDP. So one key issue is making the single market work better.
It's still a market of 500 million wealthy consumers. And while growth rates are not particularly high, especially compared to emerging Asian powers, we're a natural resource-based economy. When we look at 500 million Europeans, there's opportunities contained therein.
Yet it is the growth in Asia and other emerging markets that European business leaders are keen to harvest.
Asia, from India through China, has been a powerhouse for economic development, growth, and ultimately European export. However, I think the more developed Asian countries like Korea can definitely bring investment, as we have, in factories, in R&D, in commercial development into Europe to spark local demand.
Asia and some of the other developing countries obviously are going to be the big markets of the future. There are big middle classes growing up in South America, in the Middle East and so forth, and those are big opportunities for Europe.
Make the European diplomats responsible to sell Europe in the emerging markets so that we can attract investments from those high numbers of new multinational companies in India, in China.
Business leaders may be trying to open doors, but Northern European politicians are increasingly keen to shut out weaker countries.
That's why bureaucrats are now touting more cohesion, more integration in Europe, not less, if the Union of Nations is to survive.
And that has to be secured once forever, because what we cannot allow to happen is that the Eurozone falls apart. Not for a single country, because if it starts, then it's over. So we have to secure our future also of the Eurozone.
So the political challenge probably looks now more difficult in my mind than the economic challenge to the businessman. It's obvious that if we would like to survive, we have to swim together or we will sink separately.
Yet talk in Brussels is increasingly of a two-tier Europe, split between its northern powerhouses and its southern economic laggards. Strong growth at the core could be bad news for the periphery, meaning more divergence, not less.
So it needs to be calmed, and it needs stability, and it needs certainty. That's the thing that Europe needs to focus on now. And they need to nip this thing in the bud. And allowing it to continue on and on and on, the longer it goes on, the more uncertainty it sort of creates in terms of global markets.
Certainly, the world is watching, not just the pigs, but the whole European Union. Get the formula right, and the whole region will bounce back. Get it wrong, and it could be fractured forever.